If you're new to crypto trading, you probably hear lots of terminologies. One of the terminologies is you buy support and you sell resistance. But what is support and what is resistance? And how can you apply the support and resistance levels on your chart to identify buy levels and sell levels on your cryptocurrency? So today I'm going to go over in simple terms what is support, what is resistance, and a simple trick how you can apply the support and resistance zones to your charts to give you that edge in crypto. Okay, support and resistance. Where do we start? Where do we start? We're going to chuck in Fibonacci as well. You'll hear that terminology time and time again. This is something that I'm going to show you how to use too. So it's going to build in together with our support and resistance strategy. And I'm going to blow your mind when we apply this to the chart and I show you how simple it actually is. So this is the Bitcoin chart. This is Bitcoin on the 3-day chart. And for anybody that doesn't know what TradingView is, this is TradingView. This is where you can look at how well your crypto is performing at any point in time. So you can get a free account on TradingView. You can trade with about 3 indicators for free on TradingView. Get yourself on there. Get a free account because understanding how to read a price chart is one of the most important things that you will learn in life. It's one of the most important things that I learned in life, and understanding what's fair value, what's not fair value, when something's overbought and when something's oversold, and understanding macroeconomics and how the whole cycles work together is the best thing that I ever learned. Right, okay, before we get into the Bitcoin chart, before we get into this, what is support and what is resistance? And in fact, what is a bull cycle and what is a bear cycle and what is an accumulative phase? We're going to take a look now in brief terms. Okay, so a bull cycle, you'll get waves to the upside where you're putting in a higher high and a high, a low. On a bull cycle, this is what it'll look like. So you come up, you put in that higher high, you'll come down often to the 0.618 or the 0.786 in a strong bullish trend, the 0.382 Fibonacci level. I don't want to confuse you too much, but we'll look at that very shortly. So in basic terms, you're putting in a higher low. This low is higher than this low here. And then what's happening? You're coming past, you're putting in a new high. So you're putting in a higher high. And what was previous resistance? That was previous resistance. That's where we put in a previous high. You would expect to flip support. So this is going to flip support. And then what's going to happen in a bull run? You're going to take out the previous resistance level and you're going to put in a new high. What happens at the top of a bull cycle? You often get a black swan event. What's a black swan event? It's an event when something happens on a macro scale, like the pandemic crash, all sorts of previous macro events going back to 2008, even further, going back to the 1929 depression. There's lots and lots of black swan events that has happened in the world that has caused a market crash. And you often see it time and time again. In the crypto market, you had the FTX, you had Celsius, you had Luna, and that represent the top of the cycle. So you get a crash to the downside, crash to the downside. What will happen? Indecision. Has the cycle finished? Now think about this psychologically. You come down and people think that you're going to get a bounce. You're going to put in a new high because we haven't put in that lower high yet. Once we put in a lower high, the bull market is finished and the bear market is confirmed. So once you fail to put in this high, the bear market's confirmed, the lower high is in, and then you'll get a continuation to the downside for a period of time in the bear market. Something like this, bam. And then what happens? Lower high. So the opposite to what's happening here is happening here in the bear market. Now, what's happening here? They call this a bear market relief rally. Why does it rally here when people think that it's a bear market? People don't know it's a bear market. That's why. There's people that want to take money off the table, but they're expecting to put in that lower high. So they're expecting the price to surge to the upside, and they're happy to take money from that lower high. That's the sensible traders. There's also people, and this is probably the retail, at this point here that think that the bull market is going to continue to the upside and everything is going to go to the moon until that happens. And then bam, once the bear market's confirmed, what happens? You get that accumulation phase. You get the building phase ready for the next bull run. This is what the building phase looks like. And this is the most difficult time to trade, but it's the best time to invest. What happens? You tend to put a base in, and you put a base in, and you put a base in, and this confirms a strong low. This confirms a strong base. And once you start doing this, accumulating at these levels, accumulating at these levels, and taking 25%, 30%, whatever it is off the table at these peaks, once you're creating that range, that allows you to build and put the money back in at the lower levels and start accumulating without having to invest anything extra in yourself. So that's in brief terms what the cycles look like. What we're going to do now is I'm going to show you the magic Fibonacci tool. So like I say, this is trading view. On the left-hand side, you can go and pick your Fibonacci tools. And what we're looking for is a Fibonacci retracement tool. So we're going to stick that on here. And it looks like this. So what we're doing, because it's a retracement, we're going from the previous low and we're looking for support and resistance. Remember this, guys, support and resistance. And it's as easy as this. Fibonacci from the swing low. Watch how price sticks to the high. Right, okay. What we're going to do is we're going to pull up a horizontal ray down on my left hand. You can get it on the left hand side, but it's here down on my toolbar. It's here, horizontal ray. I'm going to pick that and we're going to look for sticking points in the market. Can you see any sticking points in the market with this Fibonacci retracement tool? This one here, 786, that's an important one. We're going to stick that on and see how price reacts to that in the future. We've got this one here, 618, golden zone. How's price going to react to this? We're going to put in the 0.5, and then we're going to put in the 382. Put the 0.5 correctly. Make sure you line up your Fibonacci lines correctly. And then the next important one is going to be the high. Bull market high of 2017. Bam. 20,000. Right, what we're going to do is we're going to see how price reacts at these levels as we continue through the cycle, going through to 2018. Get rid of the Fibonacci. And then let's have a look how these prices stick. So we're continuing to hold, we're continuing to hold. This is what I said in the accumulation phase. You've had the nasty bear market. This is where everybody thought the bull market was going to continue. We put in the lower high, bear market. Look what happens with these Fibonacci numbers. We've put in the horizontal rays. We've took the Fibonacci off. Look what's happening. We're sticking within these ranges. This is our support at the bottom. This is our resistance at the top. You can use this to your advantage. Support levels, resistance levels, and you can watch how we accumulate between a range during different phases of the cycle. So let's continue. So this is the accumulation phase, the accumulation phase, the accumulation. And what happened here? 2018, bam. This is what I call the pothole effect. So this is where people think that the bottom's in, but you need a market shakeout before the start of a new cycle. And it happens time and time again. So this is what I call the pothole effect. You've dropped the low. Look what happens. There's a big grind back up, a big grind back up. Then what happens? We come through and this holds as resistance. We've come back down. Once we break through, what happens? We expect it to flip support. Bam, support, support. It's fell through, resistance. Look how these lines work constantly. Support, look where it held. Come back down, resistance. Then you had this 2020 crash, March 2020. Bam, look what happens. Buy up, resistance, resistance. What flips resistance becomes support. Then you continue to the next run. You continue to the next run. And what do you do next? We're at a new cycle now. We put in a Fibonacci from the previous swing low to its swing high. And then we rinse and repeat again. Look what happens here. Come down. Look where we're hitting. 618, one, twice, three times. 618's respected. 0.5. You've got the 0.5 resistance. What happens? It flips support, and then becomes down, and then you get the next level. The 382, what's happened here, guys? It's come back up, put a new high, come back down, hit the 382, come back up, put a new high, and then that acts as resistance going forward. So it's as simple as this. We're in a new cycle now, top of the range, like we did in the previous cycle, and we're going to expect these lines are going to be sticking points. So if we just go forward, trading in this range, held support, resistance, broke through, support. Look how it works. And this is where we are now, guys. We expected 20,000. We expected the 69,000 to be a strong resistance point. We've reset. We've come back. We've tested it as resistance, and we've been underneath it as resistance, apart from a couple of spikes. Now what we're waiting for? We're either going to get a market shakeout and a quick buy up, or we're going to get a strong breakout, a strong retest, and a continuation. So we're looking at these levels and we're going to adjust these levels. And once we put in a new high, we can stick our Fibonacci numbers on there, and then we can rinse and repeat the cycles again. So this is one way how you can give yourself an edge in crypto, guys. And if you did find this useful, you can help me out by subscribing to the channel and stay up to date. I'm going to do more tutorials just like this. And check out my new Discord. So we've got a new Discord, link in the description below. We're constantly talking in there. We've got chart analysis. We've got crypto calls in there. We've got crypto gossip, news. So check that out in the description below, and I'll see you in the next one.